Hey everybody, Judy here with Digital Outlook, and today I have wonderful friends, and I guess they'd be guests on the show, but they're my friends, they're David's friends, and I have Vandel and Versan Algira with Black Swan Capitalists, and today I'm just gonna kind of moderate the conversation between the two guys. There's a lot to discuss, but before we get started, I wanna ask my community for a special favor. We need to get to 100,000, the 3 channels. And so if you would please like and subscribe if you haven't already, this would be a wonderful Christmas present for David, Vandel, and Versan for us to get that placard before the end of the year. So if you haven't liked and subscribed all of our channels, please do that while we're talking right now and go ahead and like and subscribe and help us get that Christmas present and get that YouTube 100,000 subscribers plaque. We'd really appreciate it. So guys, thank you so much for coming. I just always love hanging out with you guys. It's so fun. You're so full of information.
Oh God.
Oh
Yeah.
my. And we have lots of private conversations, as I always say, and I'm really excited to bring you on and just share your thoughts with our subscribers and just let them know kind of what's happening, what's your view, whether you agree with each other or not, that's fine. This isn't obviously a debate, but it's your perspective on things. And I would like to start with what is happening in the market right now, because it seems like every time there's good news coming out with XRP, the price goes down. And I have so many people asking me questions. What happens? And it's a joke I have with my good friend Christine. I'm like, oh, good, the ETFs are coming out on Thursday. The market's going to go down. And so, could you explain what's happening, and then just kind of launch from there and start your talk?
Would you like me to go first, or
Yeah, go ahead.
Go ahead. Yeah, absolutely.
I'll try my best to keep it short.
You don't
Well,
have to keep it short. We're good. Whatever you
all right.
want.
Well, you know how it goes. We have had many of these discussions and conversations off record, just catching up. The
Yeah.
truth is, we can take this discussion in any direction because everything that you see happening in the markets, it's really tied and systemically tied to everything else happening around the world together.
Mm.
When you start to look at where we are in the market cycle, the first thing you start to notice is all these liquidations. These are forced sell-offs. This is volatility that appears out of nowhere every now and then, but it's important to because it actually confirms what we many of us have believed in this ecosystem and said for years, that all markets are indeed manipulated. It's not speculation; it's theory. It's not happening in the shadows anymore. This happens openly, but very strategically, and that manipulation is never really random. For instance, the ETF, just was announced,
Yep.
and everything went down, right?
Did.
But there, yeah, more importantly, though, it serves very clear purposes and strategically many different. They try to achieve multiple objectives at once.
Mm.
The first and foremost, I think, is important to recognize that this is indeed a consolidation effort, consolidation of power, consolidation of liquidity, of assets, and ultimately of control. There is indeed a deliberate agenda to impoverish the entire middle class and justify the same solutions that we've been warning about for many years.
Mm-hmm.
Central bank digital currencies, universal basic income, and how all of this is unfolding. It's beginning with stable coins, but most people are going to indeed reject what I just said there, because I think it's an uncomfortable truth that they don't want to recognize, and it forces them to admit that the system is not just broken; it's actually coordinated and very nefarious. And we can get deeper into that in a bit.
Go ahead,
Yeah.
Vandel. What do you have to say about that?
Well, where we are in the cycle right now is we're at the end stages of this liquidity cycle. So, in other words, we're not at the top yet at the peak. I know Bitcoin is trading below $100,000,
Mm-hmm.
sentiment, and there's a lot of uncertainty and caution in the market still as of today. But currently, what we're seeing is actually a very bullish structural setup that historically precedes massive rallies and blow off tops. So essentially, what I'm trying to say is we're at the late stages of the cycle, but we're not at the peak yet. And I'm talking about risk on markets primarily, such as stocks, cryptocurrencies. And I still feel like we have another rally, a big rally coming that's going to catch a lot of people off guard, but I do think it will be short-lived. but monumental. And essentially, we're going to get a blow off top. And what's going to happen, I believe, after that is the real economic data is going to start to catch up with the financial markets. Because currently, the financial markets are strictly driven by leverage and emotions. And both of those actually have a very short attention span. So all this liquidity making its way into the market is eventually going to turn up even more as we get closer into the next Q1 of 2026. So I believe we're going to have a massive rally in the crypto markets, including stocks, taking us to new high levels that we haven't seen before. And I think it's going to be short-lived, but I think in between that time frame, there's going to be a lot of asymmetric upside and opportunity for people that are still participating in the market. But it's important to understand that a lot of market participants and even economists and financial influencers are actually spreading this narrative that, oh, the Fed is starting easing. They're cutting rates. We're going into an easing cycle. And they actually believe that this is just the start of the bull run. They think this is the beginning and we're going to go on for a bull run for a few more years. We're just getting started. And I completely disagree with that. And I have a lot of data to support our thesis and why we believe that. And one of them is a lot of the historical data, because in 2000, the Fed began easing, injecting liquidity into the system, cutting interest rates in 2000, as we were going into 2001. And then in 2001, that's when we had the dot-com bubble and finally went into a recession. And then in 2007, they also started easing before the financial crisis actually took place. And also they were cutting rates at the same time in 2007. And then going into 2008, we had the great financial crisis, the housing market collapse, and eventually reality kicked in and it hit the economy. And we just started the official rate cuts and we're going into this easing cycle. That officially started in September of 2025. So we already got a rate cut in September. We got one in October. And we're very likely, in my opinion, going to get another one in December. Now, a lot of people believe this is the beginning of a bull run, but I think it's actually we're at the end stages because of the pivot that the Fed has made and the rate cuts, and they're cutting into a hard landing. Because the real economy, which we have a lot of data to show for, is actually not doing so well. It's actually deteriorating. And all financial crises, actually, a lot of them start from the labor market deteriorating and that rippling into the real economy. And eventually, it catches up to the financial markets. So these rate cuts, in my opinion, are cutting into a hard landing. And personally, I actually believe we're in a recession, and that's why the jobs data and the White House announced they couldn't release a lot of the unemployment data, and on top of that, the CPI, the inflation information, because I believe they're actually trying to cover up how bad the real economy is and actually not give us the information we need to actually confirm that we're actually already in a recession. So in other words, what we're seeing is the late stages moving up into the next final leg of this rally. I think it's going to be a massive rally and then a big blow off top and a crash going down. And I don't think liquidity, rate cuts at that point, and easing are going to actually fix the situation and artificially pull us out of that crash that's coming. And what's interesting here is there's this 6 to 9 month window. Okay. And what that means is from when the rate cuts start, the official pivot, you got 6 to 9 months where historically the financial crisis actually unfolds. And that's exactly what we saw in 2000 when they started cutting rates. 6 to 9 months from then, that was the dot-com bubble and the recession. In 2007, they started cutting rates. They started easing. From when they started cutting rates, 6 to 9 months, approximately 245 days. That was your 2008 financial crisis. And then we just started cutting rates in September, and we have a few more to go. And if we actually use the same time analysis, 245 days or 6 to 9 months from when the rate cuts started in September, that actually takes us to between March and June sometime. So, or March and April, excuse me. So I actually believe this bull market is going to be completely over no later than March. I do not see it going on beyond that, regardless what the Fed says, what the narratives are, and what they do. And most market participants aren't willing to acknowledge this fundamental truth. And it's simple. It's because they don't understand how markets really work. So I'm just giving you the truth. I'm very optimistic and bullish in the short term, but after that, I see a severe downturn, and we just don't know how long it could last. And all sophisticated investors have to take into account the unknown factor. There are things we can believe that are there's a high probability of happening, but there are certain things that we just don't know until we get closer to that moment.
I would say a lot of people who are watching this right now are thinking, I don't agree with Vandal because, all these ETFs are coming out. We have all this great bullish news, and, there's no way that's going to happen. It's going to keep going up. It's going to go up. What do you say, Versan, about that? When people are sitting there watching, because they are, what they're thinking right now. There's no way. The sentiment's great. We're going to keep going. What's your thoughts on that? Thank you.
That's exactly how they get you. Right. Exactly. It's all about the sentiment. I mean, if you look at X and all these social media platforms, people use these large caps words to kind of get you in this state of hopium that things are going to go the way you expect them to. To complement what my brother was saying, is the only TA that really matters, technical analysis, is the macro data. And that's how the macro cycles haven't really changed. There's one fundamental truth that when you start tying into what he was talking about over there, is that this is all about rolling over and refinancing debt, government debt. It's not about productive investment. So this is debt refinancing. It's not really growth. I do agree with him. It's going to be very short-lived, this bull run. And again, I think it's all about the structure and how the monetary system is indeed insolvent. Every market move you see, every monetary policy that's being put into place is centered about one single reality. And it's simple. It's just to keep this debt-based system alive. Until they can finally achieve what they're trying to do. And that's, again, wealth consolidation, another reality most people don't want to face. I do believe there's going to be a time and place for the real sentiment as far as the technology, utility driven. That's going to be later on down the road after the crisis comes, most likely. So again, it's these macro cycles that matter most. It's liquidity. It's not really the interest rates. That's the real true driver here, because liquidity actually reflects what the balance sheet's capacity is willing to take on as far as risk. And when you start looking at this reality, when liquidity expands, that means markets are going to rise and they're going to climb higher. And when it contracts, everything starts to fail. It's a very simple but brutal truth. So I do agree with my brother. I think it's going to be short-lived, and I don't think there's going to be a lot of sentiment after people start to really face the reality. So
yeah,
Go ahead.
I do want to add something too, in regards to what my brother just said, that the primary driving factor is liquidity, and that is true. It's the primary driver of financial markets, and it's been like that for a long time. But if anybody is looking at primarily just liquidity as a lead indicator to what's going on in the market, that can actually mislead you at certain times, depending on other macro factors. Because in 2022, when we had the FTX bust and all this, shenanigans unfold, and we went into a bear market, liquidity was actually rising, but Bitcoin and the crypto market was crashing. Also in 2008, liquidity, and they were still easing, and liquidity was rising, and we went to a financial crisis. And what's interesting is the point I'm trying to make is one of the leading indicators for people out there. Liquidity is the driver, but if you want to get a leading indicator, this is just a tip. Instead of focusing so much on what the liquidity is doing solely alone, look at what the DXY is doing, the dollar index, because historically, and actually not just historically, as of current, the DXY, the dollar index, which is a measure of the US dollar against a basket of 6 other currencies. Every time the dollar, the DXY, declines, what that means is there is credit expansion and there's a flight to risk on assets, risk on investments higher up the risk curve. So as the dollar declines, you see risk on assets rise. Bitcoin, crypto, stocks, a direct inverse correlation. Okay. And when the DXY rises, what this indicates is there is a global credit, there's credit contraction taking place in the markets. And what you see as a result is actually risk on markets actually start to come down when the DXY rises. Now, currently, as my brother said, we do believe we're on the same page with this, that we do have a run that's still going to come because the setup, the structure is actually forming. And this is the same setup we see every cycle before the massive rally and the blow off top. And the DXY actually gives us an indication of what to expect because it currently is relatively elevated, but it actually looks like it's about to turn down. And I'm anticipating the DXY to actually decline even further. And you're going to see risk on markets increase for their last real leg up and massive rally before the whole game is over for this cycle.
Okay.
Yeah.
So with the new ETFs coming out in November, is your words of encouragement, you guys, to just hang on, don't sell, don't panic, or check your risk tolerance? Like what do you say? Do we have to wait till end of the year going into next year? Is that kind of what you would encourage people to do to not be shaken out? Because when you look at your portfolio, it's kind of scary to see, the stock market's down, crypto's down. And so what are we supposed to do as just average investors who aren't sophisticated?
Well, honestly, these cycles don't really change. This is when real wealth is created and wealth is destroyed at the same time. And you cannot ignore the fact that this is a consolidation phase. And this is why I always tell my friends and even our clients, once you actually understand how these cycles are played, not perfectly, but well enough, you understand the game and you can master it to a degree. It's the people who get blinded by the narrative really around all of this, and they start to sell. They trigger taxable events, and they're at a loss. Sure, you can report that, but you're still outside.
Yeah.
It's like, again, most people, I don't think they really understand how these systems work, and even if you don't understand how they work, you can still play their game on their turf simply by flipping the script upside down. A lot of people, for instance, they start selling when the markets are in a downturn. That's actually when you should be buying. Something very simple like that can make a big difference in your portfolio, right? And typically, when everyone's saying we're going to the moon, that's when I'm trimming. I'm taking some profits here and there. And what am I doing? I'm rotating it back into gold. So, in my opinion, and most people won't agree with this, but I've said this a few times. In my opinion, it's never been easier to actually make money in these markets because it's so volatile and so violent. At least you do understand the core structures there. Again, wealth consolidation, but more importantly, we're all subject to the central bank monetary policy. And that's really the fight for freedom. And I'm all about owning gold and real tangible assets. And in these kind of economic, uncertainties, it's like, okay, well, if we know what the central banks are up to here, they're essentially robbing us blindly and they're manipulating the markets. So you can't really fight that. But what you can do is at least own some assets that are going to fight against that. Right. So I'm big on gold. That's one way I'm telling everyone to protect themselves. It's a real monetary hedge against permanent debasement. And it's kind of baked into the cake. So as they're debasing the currency and they have to continuously expand the debt, markets are always going to climb upwards. Right. And also another thing to factor in is that permanent asset inflation is also baked into the debt-based system. So that's why the price of goods and services keeps going up. So owning assets is also one way you could fight all of this. But yeah, you shouldn't let fear dictate, your strategy, I would say.
Okay. And I just want to say, and I want you to say what you're going to say, Vandal. So someone who is all in and they're hanging on, just watching the market every single moment of every single day, as many are, they should just calm down, relax, and just try to hold the wave for the next 6 to 9 months is basically what you're saying. Don't panic. If you can afford to buy more or buy different assets like gold and silver, but don't panic sell unless you're at a place where you need money and you've over leveraged your own finances. But there's not much more they can do except hold at this point and not to panic. Would you agree with that, Vandal?
Yes, I absolutely do agree. And I think the most critical thing here is this is the first thing, the most important thing, okay? It's first of all, having conviction in your investments. Okay.
Mm-hmm.
If you're investing in something that you actually don't fully fundamentally understand, then it's very easy to actually get fearful, to panic sell, and to get shaken out due to large spikes in volatility and pretty steep declines, which actually are typically normal in crypto markets, generally speaking. As a matter of fact, historically, every bull market, not bear market, I'm talking about a bull market, has
Mm-hmm.
had between 7 and 10, 20 to 30% corrections in cryptocurrency on average. So it's actually not uncommon to see that, and especially at the later stages of the cycle before the next massive leg up. What they're doing is liquidating over leveraged longs that have um, a lot of borrowed money in the game,
Mm-hmm.
essentially, and they're pushing levels to their stop losses to wipe them out, wipe out all that excess leverage in the market, and essentially it creates a liquidation cascade effect. And on top of that, you have another effect added to it. It's panic selling. Because
Yeah.
as people see the price go down, they start freaking out. They don't understand the game, so they start selling, and that creates more of a ripple effect. And it
Mm-hmm.
just flows throughout the market, pushing prices even lower and lower. So when moments like that happen, I think it's important to understand where you are in the cycle and most importantly, have conviction in your investment. Because if you understand what you're invested in, and on top of that, you understand how markets really work, then you actually feel comfortable. You don't worry. I mean, we've seen our portfolio drop more than, a couple hundred grand on certain days, like the $20 billion liquidation. We don't care. We're going to the gym, we're doing
I
our thing,
laughed.
making a video.
You laugh.
It's just
I
business as
did. I'm
usual.
not kidding. Yeah, I
Yeah.
laughed.
So the thing
We
is
could see it
to,
go further low. I mean, so a
sure.
warning to the people, it can go lower and don't panic.
Yeah, don't panic. And the another important concept that people should cement is that, well, really, the truth is here, crypto markets are extremely volatile. So they're treated
Mm-hmm.
as a risk on asset class. They're very speculative, despite some of them having real use case and utility and real fundamentals. I
Mm-hmm.
believe that at some point in the future, once the market matures, once uh, tokenization expands across global markets and all the value in all forms becomes tokenized, you will see a handful of these blockchains and their digital assets begin to get mainstream adoption and have more demand by financial institutions in order to utilize those technologies. But right now, that's not what you see reflected in the market. Because the thing is to understand is financial markets, they always defy logic.
Yeah.
To us, what we think should happen is not necessarily happening because logic doesn't apply to markets all the time. You know,
Mm-hmm.
if so the point I'm making is just to be aware that these crypto markets are extremely volatile and anything can happen in the short term. And the other point is it's so important to have a long-term time horizon. And the reason is because so many market participants, they overestimate what returns they can make in a short period, and they really underestimate how much wealth can be created in the long term. So it's so important to have a longer term mindset. And if you have the risk tolerance to withstand these huge volatility and severe drops in the market, and
Mm-hmm.
if you have conviction in your investment, and you're thinking long term, then all that serves is a huge buying opportunity, you know? So you would take advantage of it if you're interested in acquiring more of that specific asset because you believe that this investment is a good investment and will it be much higher in price in the future? Will it appreciate in value in the future? If the answer is yes, then you should still have strong conviction in your investment and take advantage of a buying opportunity.
Mm.
So that's how I'm looking at it. I see this as a buying opportunity. And the reason is because we are, in my opinion, we are not at the peak of the cycle yet. We're at the end, later stages of it, but we haven't topped out yet, despite what the narratives and what a lot of financial influencers are saying. I don't
Mhm.
believe we're at the top. So I see this as buying opportunity.
Mm.
Yeah. If I can add something
No,
to
go
what
ahead,
he's saying, like
please.
try to simplify it. When people ask where are we in the cycle and how can they really protect themselves, also to reflect on what I said earlier, the answer is actually quite simple. You protect yourself the same way people have protected themselves for centuries. You hold assets that can't really be printed, manipulated, or even digitized, and that means they can be seized. And again, advocate for precious metals here. You need physical gold, you need physical silver, not because it's fashionable or cool or trending. It's because they are the only real monetary hedges in the system that is moving aggressively towards a digital control system and, of course, consolidation. So I keep repeating the same message. And the
Mhm.
other part of this, to complement what my brother was saying, is the other protection is liquidity. We've made
Mhm.
it very clear many times for people to have buying power, dry powder aside, cash, because when you see these downturns, this is again where real wealth is created. So to my brother's point, it's a buying opportunity. I've been buying on this way down. I'm not panicking. I keep getting emails, and that just kind of tells me the sentiment of what other people are thinking. And once again, we can reflect that it's like people still haven't figured out how this game is played.
Mhm.
So when the market begins to sell off, that's when you should be accumulating what others are forced to give up, and simply because they haven't played this smart, right? And if the cycles were reversed, that's when you instead of panicking, you'd be selling, right, when it's on its way up. So it's really not hard again to make money in this ecosystem anymore. And then there's the other side of this, which people should know that there's this massive, well coordinated effort by the Bitcoin maxi crowd. And what they've been doing is financing these deep fake AI videos. Yeah, to these deep fake AI videos to use like economists like Warren Buffett, a few other financial strategists to encourage people to go sell their gold at those highs and go buy Bitcoin. And many people, unfortunately, followed that. And that's simply, again, because they don't understand the dynamics of what's happening here and how, people are being erased and their freedom essentially is being taken away. And that's what gold and silver are, real assets, again, that can't be manipulated or digitized or seized. That's freedom. Okay. So we're losing the real battle, I would say, when you look at the overall population, all sentiment about crypto and digital money, not realizing that this whole game has been co-opted now by Wall Street. So something that was going to free us is now going to enslave us. Um, and people are being, coordinated effort to again get people to sell their gold, go buy Bitcoin, and buy certain cryptocurrencies. And what happened? The market was shorted again. So this is confiscation, this is fraud, this is manipulation. And this just confirms everything we've been talking about. And the funny thing about this is that gold is gradually being, again, reintegrated back into the monetary system as collateral. And you're
Right.
going to have some digital infrastructure, cryptocurrency, distributed ledger technology that is essentially going to overlay all of it as far as settlement infrastructure. And that's the difference also between Bitcoin and cryptocurrencies overall and, for instance, like XRP and XLM. There's digital assets, and then there's settlement infrastructure. Knowing the difference is really the key. So again, you need to know what you're putting your money into. If you are confident in your investments because you've researched it enough,
Right.
you're going to sleep well at night. And you
Mhm.
need physical assets again so you can sleep well at night when you see these artificially manipulated markets. Final thing I'll say, when it comes to our community's investments like XRP and XLM and some of these other technologies that are ISO compliant. You need to be mindful that as long as these technologies are coupled to debt-based speculative assets like Bitcoin, there's going to be volatility. There's going to be a time and place in the future where I do believe a decoupling will happen. And that's going to change the dynamic of this conversation. And more importantly, the people who are investing in this infrastructure are going to feel a lot better. But you have to be confident about what you're investing in. And that's why we always tell people, go do your research.
Right. That's good. That's good. So I just want to reiterate one thing. So do you guys believe that the price is going to go a little bit lower before the 6 to 9 month upturn happens?
It could, certainly.
Well, I gotta say something. Yeah, 6 to 9 months, I see us in a serious recession. I don't see things all dandy as people are being led to believe. I don't think the crypto markets are going to do well in 6 to 9 months. I think this is going to end no later than March.
The
If I'm
pump will
being,
end no later than March.
yeah, after March, I don't see us being in a bull market. We're going to be in a bear market by that time. I think the real economic data is finally going to hit the surface. And I know people say, oh, regulations, this, institutions, that. Look, I'm going to tell you the truth. None of that matters. Okay. The truth, none of it matters. Those things might be rooted in truth to some degree, some of them, and they will manifest and eventually they will come to fruition. Okay. But it does not drive the markets. The markets are in charge here. All the narratives coming around it are just to support what's happening in the financial markets, in the ecosystem. And I'll give you one example. After Versan shows this, I'm going to show you my chart that will blow all of your minds. Okay.
Okay.
And this chart that I'm about to show you is something I share in my private group. And essentially, a lot of the major ETFs that were announced are announced at the top. And then the market crashes. So you said the XRP ETF was just released, correct?
Yep, and it went down.
Yeah, this was by design. They wanted to use you as exit liquidity. There is a reason they told the news channels and the media, whether it's social media or influencers or a credible media channel, they told them, hey, this is the narrative, push the message out, make sure it gets to the people. That's how narratives work. They work in favor for institutions and big monies. They're not there to serve you and to give you the proper information ahead of time so that you could advance in your financial situation. They're there to extract liquidity from you and exploit human behavior because they know humans are emotional and they react to news and narratives. Okay. Long term, the ETFs are going to have an impact, of course. But in the short term, this is to actually mislead you.
As David would say, a dog and pony show. He says that
It
all
is,
the
yeah.
time.
Another thing,
I don't care if people don't believe it or not. That's the truth. I've
No,
been
I
in
agree
these
with them.
markets long enough.
How can we
and I
not
have,
believe it? We were watching it, the lawsuit being done, the price goes down. The ETF being built up, it goes down. It's like it's perpetual. Like, I mean, anyone who's been in this space for even a year can see the news goes up and everyone gets all excited, yay, and
Yep.
then it crashes. Or not,
the
goes
hedge funds and institutions that control the market with large positions, they actually tell the articles and the media channels what sort of news should be crafted and pushed out at certain times with precision. This is by design to sway masses with their liquidity in one direction or another, to serve the institutions and big players. That's it. And if you can understand this fundamental truth to the game, you're actually way ahead of 90% of investors. To most people, this sounds conspiratorial, but it's not. This is how the markets work. This is the game. And they use the narratives and the media to sway you in one direction, either panic sell or to buy and be greedy at the top of the markets. And what they're doing is the complete opposite.
Yeah.
And it causes discourage. I just say this real quick. And it causes discouragement. Our channel is very discouraged. The people in the space are very discouraged because they were hoping by now things would go up. And so I believe that. And I hope our audience and our subscribers are listening to this because It's a game, you guys, and we have to learn to play the game. Go
And you
ahead.
got to think long term too.
Well, they've really, I hate to say it like this, but trying to be polite here, it's just that a lot of the X community has really dumbed down the conversation. And that's one of the biggest problems that ties us into what my brother's saying here, because they've boxed millions of people worldwide into really a centralized control grid that is actually confiscating their wealth through these psychological reactions people are getting. Okay. So ETF narrative, look at right now on X, everybody's using big caps. This is going to the moon, and they're always wrong. And that's what I've said about some of the TA guys in the past, the technical analysis. I mean, 4 or 5 times in my private group, I've explained like, hey, they got it wrong again. This is comical, in fact. And it's simply because they're allowing the narrative to dictate the emotional response and the tweets that they're putting out there, which millions and millions of people who are really honest, good looking people just looking for a way to survive and to get ahead of the game because of the economic conditions. It's all tied in together. This is mass manipulation on a global scale, and it's all psychological. But again, going back to those macro charts, those structures really don't change, though.
No.
So if you understand that, you can't master the game, right? But it's interesting. Like you said, you made a very solid point there, Judy, that when the SEC news came out, I do remember price tanked. And listen, they've decided what they're going to do with this digital ecosystem a long time ago. Okay, it's funny. Martin Armstrong told me this off record once. I'm okay to share it. He said, Versan, when I asked him about XRP and certain assets, I said, these things are getting adopted worldwide. Why isn't certain people talking about it? He said, number one, higher echelons of finance, and Rick Rule said this as well. Secrecy is the name of the game. That's one. The second thing he said, he laughed at me in a comical way and said, Versan, the IMF has their currency ready. I have confirmed it. He couldn't confirm it was XRP. I kind of will do that for the audience. And he said, there's going to be a geopolitical crisis. And when that happens, that's when they're going to reveal it. And it's already ready to go. They're just waiting for the right conditions to bring it out.
And they'll set up the conditions.
We need a black swan.
They're setting up. That's why we called ourselves Black Swan Capitalists. In fact, Mendel and I were laughing about this when we put the name together, because the funny thing is we always make money when bad news hits. And we capitalize on black swans because we're typically, analyzing the trend, seeing where it's going. Even something he said was important, how they craft these news and headlines to align with everything. It's funny. I was watching the news and someone was saying, Versan, why are you watching the news? It's all BS. I said, that's exactly why I'm watching it. I'm watching it because I need to hear the BS to see what they're programming the millions of people out there who are naive enough to believe it, so I can do the exact opposite. Okay. It's kind of like that whole Jim Cramer thing, Yeah. So, I mean, it really is that entrenched into the minds of investors too. And we're at a turning point again, no pun intended, because that's the name of our show. Called it the turning point because you have all these massive events happening around the world and these moving pieces, and it's so intricately designed and systemic. So there is going to be a short-term lived bull run, and then we are going to have a massive crash. And it's funny because on our private groups, we tell people that we are preparing our positions to sell at these highs, and that's it. We're getting out 80, 90%. Utility is going to come after the destruction of the global economy. It's all tied in together. It's incredible. So when you see these people posting on X, I hate to say it like this. This is why we keep a very small circle. It's mostly noise. It's mostly hopium of something that is not realistic. And, you upset people about it, telling them the truth. And again, it goes back to what I said in the beginning. It's like when you start telling people the truth, they get very uncomfortable about the situation because it's like, I can't believe this. No. But interestingly, those who are holding XRP, there is a whole different discussion around XRP and how it ultimately is going to consolidate everything around it. So you're going to have your XRP moment. It's just we don't know when.
Yes.
There are a list of things that could happen, wild cards, you could call them. Banking crisis, the AI bust, a number of things that could play out. So you have to be prepared. And that means having a layered strategy. So you have your long-term investments for the future because you know where it's going. You have your short-term investments that play with the market cycles that are artificial liquidity injections, contractions, and expansions. That's how you make your money. And what do you do with those profits? There's a war on cash for a reason. They are so desperate to track you, trace you, and tax you on everything they're doing. That's why they're going digital.
Right.
You need to be buying gold and silver. A lot of people in this ecosystem, I know they're not crazy about gold and silver, but you need physical, tangible assets. I'm sorry, that's real protection. I sleep good at night knowing I have gold and silver. Okay.
So the part of the internet talking is if you sell your XRP, you might not ever get it back again. What do you say about that, either of you?
It's regulations, really. I think there will be a precedent later on down the road where once this stuff is fully enforced and implemented, Clarity Act and so forth, XRP ultimately and other assets, select ones, they do become a strategic investment for governments and financial institutions worldwide. Where then there might be some criteria where you're not allowed to buy in, or it may be too expensive, or there are certain conditions you must meet in order to access it. So we'll see. I don't know.
Yeah, personally, I don't believe that. I think that's a false narrative. I think the way they're going to price people out of affording it is by the price naturally rising over time. There could be certain events that unfold geopolitically that actually move the price higher based on certain events, but that would also be driven by what drives price. Economics 101, it's supply and demand. If the supply is capped and the demand keeps rising because of geopolitical events or whatever, what have you, well, the price goes up because there's a limited supply. On top of that, as long as we have a debt-based system and they keep debasing the currency, well, that currency that they're the currency that that we price these assets in are in US dollars, in fiat currency. So as long as they're increasing the amount of currency units into the system, which is credit issuance, debt issuance, that actually expands the money supply. And that money supply is essentially fiat currency, and that fiat currency is what we measure assets in. So as long as they're diluting the currency, the asset that we measured fiat in only goes up in price. So you got two forces that are going to push prices up for XRP and other assets. But I don't believe at all that they would not allow you to buy XRP. Now, is it possible? Sure, it is possible. In 1933, they confiscated gold. They issued the executive order to confiscate gold, and they actually told people it was temporary, or excuse me, they told people that it was for this reason or that reason. The truth is they confiscated gold because all countries like France, they realized America was printing more money than they had of gold to back it up. And all these countries were coming to America, getting their gold back and saying, hey, here's your dollars. I don't want it. Give me my gold back. Give me my gold back. And essentially, there was a lot going on. And then 1971, they took us off the gold standard. But basically, the point I'm making is that they can ban something if they wanted to based on creating laws around it, certain regulations. But you can't live in that mindset. It's really silly to think, oh, what if this happens? What if that happens? I mean, what if your head blows off? What if a hurricane hits your house tomorrow? What if you die of food poisoning? There's a million what ifs. Are you going to live your life thinking, what if that? What if that?
Yeah.
That's thinking too much, and it's not healthy. If you have a problem with the situation, or you want to avoid being a victim, or you want to avoid being in a situation where you can't buy back your XRP, don't sell your XRP. It's that simple. That's the answer. I mean, if you want to participate in the market and create wealth in the cycles and play this game, then do it intelligently while still maintaining a core position in cold storage for long term. So you could take advantage of both scenarios.
Right. I went down. So when the price, so I just want to clarify for our subscribers out there. So between now and 6 months, 9 months, whatever, right in there, the price is going to go up. And you guys said that you're going to sell. Are you going to sell to buy a house or pay off your house, or to only invest in gold and silver? Because if fiat's not worth anything and you're selling your assets before the downturn,
Hmm.
Where besides gold and silver, where else should people do? I know for some
Well,
you, but you know what I
I
mean? Like,
mean,
do we pay off our house? Do we pay off our debt? What do we do with it to kind of secure our life? Because a downturn means you could lose your job. You could, there's a lot of bad things that are probably going to happen if the economy goes down. What is your advice to people if they're selling at the peak or on their way up? Where do they put their money besides gold and silver?
okay, well, I'll
there,
keep.
go
Um,
ahead.
well, I want to first of all be blunt about the entire cryptocurrency ecosystem. Okay, 99.9% of crypto is pure speculation. Most of them will indeed crash. I truly believe there's going to be a time and place where they all go to zero. And it's interesting because they're building regulatory frameworks that are going to kind of justify this. Hey, this is why crypto is bad. This is why we need state controlled private cryptocurrencies or something along those lines.
Mm-hmm.
And this kind of eludes people from the bigger picture here that crypto is a wealth extraction tool for the system. Um, how do you actually protect yourself? I intend to pretty much sell 80% of cryptocurrency, most of my holdings, but I don't intend to sell my XRP even through a bear market. Even when if XRP jumped at 20, 30, even $100,000, I know it sounds crazy. I still wouldn't sell it. I do think XRP will be considered to it will be leverage in the new system. It's not really designed to operate like a speculative asset, even though most people in crypto treat it like a speculative asset. Hey, if the price goes up, I'm going to sell it. They don't really understand even how XRP has its architecture in there and how it's going to be integrated into a value consolidation system where essentially you do become your own bank. I do believe this. I explain it in detail on my YouTube channel and my Patreon, or if you book a session. Um, but I wouldn't sell the XRP. I think it's going to be digital collateral that overlays gold as collateral. I've talked about the intersection there. I really believe that. If you are going to be taking profits, what do you actually put your money in? Something Clive Thompson talked about in 2022, former Swiss wealth manager. And he was explaining how the debasement of currency is ongoing.
Right.
And that's essentially wealth extraction. They're stealing your purchasing power, your freedom. So, what do you buy? You have to buy assets, anything. So, it doesn't necessarily have to be gold and silver. But what I found out from my World Economic Forum document for 2025, Larry Fink from BlackRock took over. It explains in detail that when this new system is essentially enforced, you're going to have digital IDs. Trump administration just made an announcement on it.
Mm-hmm.
Apple did too, as well. So these digital IDs, if you're not participating in them, you're going to be excluded from financial inclusion. That means you won't be able to buy water. You won't be able to buy food because you'll need a digital ID to access the money to buy those things. Mm-hmm. So I already spend my money in cash because it's really decentralized. There's no trace. That's why there's a war on it. I've been buying food. I've been buying water. Propane tanks, guns, gold, silver assets, even toothbrushes, like little things like that. Really, it's something people don't think about because when the pandemic happened, I remember you go down the street, no water at any gas stations, no water at the grocery stores, people getting robbed in the parking lots.
Mm-hmm.
That's just an example. Now imagine if the complete monetary system failed or if we were under attack or something along those lines. It would be chaos and anarchy in the street real fast. So these are the kind of things I spend my money on. And it prepares me for any situation, for any outcome, because there is a nefarious agenda behind all of what we're talking about here. And many people don't want to face it. They'll just say, trust the plan. What plan? If you're saying trust the plan, I guarantee you don't have a plan. That's why you're expecting someone else to take care of it for you. So that's what I would spend my money on: assets, things, before the dollar loses complete value and goes digital, where they can watch everything you do.
You wouldn't buy a house, or you wouldn't. So if your XRP goes to millions, you're just going to watch it go up and then watch it go all the way back down and not take some out to at least buy a house or to secure your household.
No, so that's why I've diversified my portfolio. So I can
okay.
mark my words on this. If the market, when the market does shoot up and we do have our bull run, I will make millions. And as a result of that, I can cash out of, I would say, 80% of my other assets and still have the capital and the resources to survive a bear market, even if it was 4 or 5 years. So it all depends on your financial situation. But then again, I have, 500,000 physical gold and silver and other assets. So that will outperform everything, even crypto, in a market like that.
So you would sell your gold and silver if you needed to?
No, I wouldn't. But
You're never going to sell it either.
If I had to barter with it, I would. Yeah.
Oh, okay.
So there are many ways to protect yourself. It all depends on your financial situation, but I intend to sell again half of like 80% across the board of all assets, not XRP. And I'll still be able to survive a bear market because I believe XRP, when this bear market does come, that's going to really create a situation where you then decouple from the dollar because this all boils back down to the US dollar and the treasury market. And the stable coins are a short-term solution. Soon people are going to realize that these stable coins are associated with toxic assets. It's the dollar.
Right. What do you do if you're all in XRP? What if you're all in? For the viewers that are like, I'm all in, my whole hope is in XRP. I don't have any other money to have. I might have a little bit on the side, but nothing. What do you guys say to that person when it's going to go up and could they sell some, get out of debt, maybe pay off their mortgage, and then jump back in once it crashes?
Yeah, I'll tell you exactly how to think about it. So first of all, this is extremely critical. If you're positioning your portfolio for, let's say, 1 year to 3 years, that's called the medium term. You need to get very clear on whether you should be more aggressive in your portfolio or if your portfolio should be more defensive. And the reason I say this is because if you have an aggressive portfolio in a market that requires you to be defensive to protect your capital, you're going to get destroyed. And if your portfolio is very defensive in a market that still has a lot of room to go, then you're going to miss out on a lot of return on investment and gains. You're going to leave money on the table. So positioning from 1 to 3 years, you have to get clear which side do you want to lean on more. Think of it like a vehicle speedometer. 0 meaning you're all cash out of the market, very defensive. 100 on the other side of the speedometer is you're all risk on in the markets. Now, I never tell people that you should never be 100 on one side or 0. You should find where do you lean in between. Should you lean more aggressive or defensive given the market conditions, where we are in the cycle, your risk tolerance, and your age? That's number one.
Right.
Yeah. Secondly, if you're invested in the crypto market, specifically, let's say maybe just XRP, well, you need to get very clear on what's your why. Why are you invested in XRP? Are you here for utility and long-term growth potential and appreciation? Because that's going to happen when the world is in a worse place than it is today. But that will happen inevitably. We believe so. There's high probabilities that suggest that will be an outcome at some point. We don't know if it will be quick or long, but we believe that's yet to come down the road. So you have to get clear on your why. Are you here for the long-term appreciation of that asset? Or are you interested in holding a position for the long term, but at the same time, maybe you want to capitalize on these cycles, these massive price appreciations that we see in bull runs? Because once you get clear on that, then you can have a better framework and a strategy on what next steps you should take. Maybe you should sell some, maybe you should hold a percentage for the long term. And another thing to take into consideration, this is extremely important, and I always tell people this, there's only 2 reasons you should ever sell your investment. The first reason is you've lost conviction in your investment. You've revisited your thesis. You realize this is not such a good investment. I would not buy it today. Okay, that's a valid reason to sell it if the price goes up or if you want to sell it now. Get out of it. That's valid. The second reason you should sell your investments, any investment, is There, you decided that, hey, I need the money for something specific. You know, if your investment, your portfolio reaches a certain threshold, and you know if you sold a percentage of it, you would have the ability to do something financially in the real world that you want to do, then that's a valid reason to sell. For example, you want to put your kids in private school. You want to buy a house to own a tangible asset, or
Right.
buy pay off a car, pay off your mortgage, get clean up some debt, you know. Those are valid reasons to sell up your portfolio or a percentage of it.
Right.
So there are only two reasons to sell. Either you lost your conviction, or you need the money for personal situations.
Mm.
Now, if you don't have either of those, then you can withstand the volatility and hold and have a long-term time horizon. But you have to make sure you have time on your side. And this
Yeah.
is where age comes into consideration, because let's be realistic here. If you're in your 60s and above, maybe it's not a bad idea to sell a percentage because you want to retire comfortably, and your goal in your mind, you had a $2 million balance that you would like to see. Now, if your portfolio gets near the 2 million, or even 1,500,000, well, it might be a smart idea to sell then. It doesn't matter, XRP or not. Sell, because that's your opportunity for freedom to walk away. It makes sense to sell in that case, you know?
Mm.
So it's
Okay.
just personal financial situations and personal financial goals, long term and short term. And that's how I would approach it. That's how you have to think about it. It's not complicated. People
Right.
complicate things too much. It's very
Mhm.
simple. If you need
Mhm.
the money, sell a
What you
percentage.
have to do.
Okay.
Yeah.
If you don't need it, hold what you can afford to hold, and expect a lot of volatility and have time on your side, a
Mhm.
long-term time horizon. And that's why I keep saying so many people overestimate what they can make in the short term, and they expect miracles overnight, in months,
Right.
in
Yeah.
crypto especially. But
Yeah.
they completely underestimate how much wealth you can compound and how much that investment can grow over a long period. And that's
Hmm.
why you have to get your psychology correct. If you can't fix your mindset, first of all, you should not be investing in this market at all. Go buy gold or go buy treasury bonds if you want something stable temporarily, you know.
Right.
So if you're in this because you're thinking long term and you want to participate in the greatest wealth transfer of our generation, then this is it.
Hmm. That's good. I wanted to ask you guys in closing, because we've been going and this is so amazing. I wish we could have a part B. Um, so what is your seeing where the markets are right now, and because everything's just changing constantly, what do you believe the high will be, like a range perhaps? I'm not asking for price prediction, but like what are you looking for to start laddering? Because I know you encourage laddering out, not trying to hit a top, because no one knows where the top is. If we did, we'd have a crystal ball and we'd be multi-trillionaires calling the market. But what do you believe the range is within this next 6 to 9 months, or however, if you say in the next 3 months by the end of the year, January at the latest? And what do you think, how low do you think it could go? Like how bad is bad?
I mean, it can go significantly lower. I mean, as long as, listen, at the same time, they're just trying to create a situation where they can justify further intervention.
Okay.
If they can continue to expand the debt, the markets are going to climb higher. They're going to do it. We see a lot of parallels happening to what we saw in 2019. The
Hmm.
markets were under extreme stress, like today. That mirrors exactly what we saw in 2019, and right before the orchestrated COVID narrative. Don't worry, you won't get kicked off for this. And they try to achieve
Right.
multiple objectives at the same time, but it created the perfect justification for some of the necessary agendas they needed to accomplish, like transitioning us into a digital age. And of course, we saw the same bull market. So we're going to see something very similar to that. One spike higher. I think what they're doing right now is trying to reset leverage. That's why the gold price probably came down a bit. But
Mm.
more importantly, they're trying to wipe people out. They're trying to re-leverage those positions. It's interesting because the ETF narrative just came out, and this is just the beginning. You're going to see a stream of news coming out very similar to this, and they're looking for entry points, really. So they're going to pump this thing higher one more time. How low can it go? A lot lower, really. I think Bitcoin could actually go down to what's it lingering right now at 90 something thousand, I believe. Could
I
easily
think
go to
so.
70,000. I'm not saying it will, but it could.
Right, right,
Bitcoin also is a whole different discussion. It's a
right.
Ponzi scheme fraud mechanism that's tied directly to the bond market. Well, if they have stable coins now to buy those bonds, you don't really need Bitcoin anymore. just
Right.
a just a funny playful thought out there, but
What about XRP?
um,
Where do you think it's going to go? How low can it go? Like in the crash, I'm talking not just temporary, like when it goes down,
yeah, as long
like
as it's coupled to Bitcoin and the debt-based system and other volatile crypto speculation, it can go as low as it needs to. I really don't have an
you
answer
can't
for that.
even do it. Okay.
No,
Yeah,
but yeah,
so
but that would be a final buying opportunity as well before it pumps one more time.
mhm.
Okay.
For Versan and I, we're macro cycle investors, but at the same time, we're long-term investors in this asset class because we believe it is going to be more relevant in the future than it is today as tokenization expands across global markets. However, though, when it comes to our exit points and exit strategies, our approach is very simple, okay? A lot of people put price targets as their exit points or
Right.
price ranges. We
Hmm.
look at price ranges, but that doesn't determine our exit point. Our exit points are determined by conditions that form in the market. And those conditions forming in the market, the macro factors, what's happening in the market, actually gives us the signal that, okay, it's time to take decisive action now. And that's essentially how we plan our exit points. We're essentially riding this economic trend until the trend starts to break structure and we see warning signals flashing in the conditions of the market.
Can you give us an
And
example, like
mhm.
Oh
beginning
God,
strategy, something?
absolutely.
Yeah, yeah. You want to go, Versan, or
No,
should I?
please go ahead. Go ahead. Yeah, I'm
Okay, so for example,
running out of
we
steam here.
we
Okay, we're almost done for Sun. Hang in there.
sure, I'll just keep it really brief. I share a lot of this in my private group, and so does Versan as well. But for instance, Bitcoin dominance historically drops all the way to 49%, and then it starts to go much lower. Historically, every time that Bitcoin dominance drops and drops sharply for about 2 weeks to 28 days on average, or a little longer, that is your altcoin season getting started and ramping up, finishing the end cycle of the bull market. So that's one indicator. For example, another factor is the warning signals actually flashing in the from a macroeconomic perspective, such as the 10-year minus the 2-year yield curve. Inverting, it's done that already. A lot of people think that's a call for a recession. It's not. Inversions happen, but the call for the last warning is when the yield curve steepens upwards at an accelerated pace. That hasn't happened yet. But as soon as that happens, the 10-year minus the 2-year yield steepening, the 10-year minus the 3-month yield steepening, high yield credit spreads steepening, those are flashing warning signals saying that the market is about to downturn significantly. So
Mm.
little factors like that. But as for taking profits, one major macro condition
Mhm.
is sentiment, maximum sentiment and maximum optimistic euphoria being floated around mainstream media, pushed by the mainstream legacy channels, news channels, hype being
Mhm.
over exaggerated. Sentiment is a key component in our strategy because it actually tells us what the crowd is thinking, and therefore the markets are an expression of that human emotion of
Mm.
the crowd. Okay. And that combined with Bitcoin dominance dropping sharply, and there are a few other ones, but that's just to
Yeah,
name a
the
few.
amazing. So when the
Um,
fear goes to greed, that's a key indicator for you as
uh,
well.
yeah, we do have in both our Patreons,
Yeah, of
we
course.
have a very strategic methodology, you could say, to help people navigate this. For me, I'm also very macro on this, but I believe in long-term investments for growth. I have short-term investment opportunities for taking profit
Right.
and rotating that into wealth preservation opportunities like gold and silver, right?
Right.
It's not really gambling, this three tiered strategy. It's strategic positioning. You are
Mm-hmm.
trying to leverage the adoption for long-term growth. You're trying to leverage liquidity injections for short-term profit taking. And then you have the institutional momentum that is about preserving wealth. And that's where institutions are buying gold and silver. So the key takeaway is to be disciplined and implement this three-tier strategy. And all you have to do is really repeat this cycle over and over. And yes, you sell when everyone is euphoric. You buy when everyone's panicking, like today. So
Okay.
green days, you take profits, red days, you accumulate. And mark my words on this. If you follow this and you do have the discipline, I know this sounds a bit funny, but you're going to get richer with every liquidity injection that you see. And you start to grow your wealth and you start to rotate it more into real tangible assets while patiently waiting for these larger geopolitical shifts to play out. And
That's
that's
good.
really the bottom line.
Mm-hmm.
So discipline is probably the most important takeaway from this conversation.
That's great. Those are good final thoughts. Vandal, what are your final thoughts as we wrap up this segment?
Yeah, well, some of the information I just shared with you and what Versan shared as well. Um, a lot of people out there would say, oh, well, if it's that simple, then why doesn't everybody do it? Why isn't everybody rich? And the answer is simple. It's because institutions, they
Yeah.
don't care if you have the information or not. They care what you do with the information. And they
Mm-hmm.
know, because they are masters of psychology and deception, they understand that 90% of people in the world are not top performers. And they understand that most people in the world are not going to trust the process, execute with discipline, and actually go through the tough times to make it out on the other side. They understand that. So they don't care if the information's out there. They don't care what you, my brother, and I are sharing with the public, no matter
Mm-hmm.
how methodical and extreme the informational advantages. They don't care because they know most people won't use it to benefit them. So they're not a threat to the institutions, the whales, the big players, and the hedge funds. It's a simple concept, and the same reason 90% of people in the world are not top performers, the same reason not everybody in the world has a six pack. Everybody knows how to get a six pack. The information is there, but why don't people do it? Because they
Because they're
don't
eating
have the
chips.
discipline. They don't have the
They'd rather eat
mindset,
chips.
but you get the point I'm making, all
Yeah, no,
right?
that's good. That's
So I
good.
just want to tell everybody that
Okay.
all the information is out there, okay? It's not about who has the information and what information you have. It's about how you interpret it and what you do with the information. That will
Mm.
make all the difference right there.
You know, this is the beautiful thing. We can continuously go back and forth. He says something that I have
I
to
know
kind
it spurs something, right?
yeah, a final thought, really. This is the final
Oh,
thought. It's
okay.
just,
Okay.
we are at a turning point, and I love using that terminology
Mm-hmm.
now because
It's a good
it,
word.
it is. Yeah, it's a great name for a show too.
Mhm.
We're in a turning point where, this 80, 100-year pendulum swing, and where everything around the world, and that includes psychology, human behavior, and it's all being rewired. And that's kind of tying us into the financial order. It's really money
Right.
and the financial system that underpins society and who we really are, because that's what drives us, right? So the way I'm telling people also is to kind of let the markets behave as they naturally do, those macro cycles, and try to let the noise just filter out the noise. You have
Right.
to. And
Good.
that kind of ties into the discipline. So if you already know what's coming based on the research you've done, you've worked hard to understand it. All you have to do is position yourself, and patience is going to be your greatest asset at that point. And, Vindel and I have said this before, but we're always here. We're always here with everybody side by side. We're walking it through you, this journey.
Yeah.
So, if you ever need anything, you can always reach out.
Yeah, absolutely. Guys,
Mhm.
they have their Patreon group. This is a dynamic duo, that is to be sure. And I really appreciate you guys both coming on and spending time with me and just and our community and just sharing your thoughts and your perspectives on things. It really means a lot to us. I know I always enjoy our conversations very much. And so
We
I just
love
want to
you.
thank you so much from the bottom of my heart, you guys. Thank you so much for coming on our show. And remember, you guys, like and subscribe. Get us all 3 of our channels up to 100,000. We want that placard from YouTube for Christmas. So we
Thank you.
appreciate you guys. Have a blessed weekend and a blessed week coming into Thanksgiving. And I wish you guys all the best. So thank you so much for coming on.
Thank
Thank you,
you.
Judy. Good seeing you. We'll
Always a
talk soon.
pleasure.
Thanks. Okay, you guys take care. Bye-bye.
I just wanted to show you something real quick. I did this myself. I
Okay.
basically looked at every major ETF and big announcement that the institutions did. And basically, I overlaid the Bitcoin chart. So this is what I did. I checked all the dates for the
Wow.
announcements and the releases of these financial instruments. And look at this. This is why institutions, look, I'm telling you guys, if they told me XRP was the world reserve currency tomorrow, I'd be selling all of it because I know they're going to crash it. Okay? That's how they operate. They're not going to tell you when it's really going to really kick in utility. They're not going to tell you. It's going to happen and catch people off guard. If they're telling you something,
Mhm.
it's because they want you to believe something because they have an agenda. And it's usually to use you as
Wow.
exit liquidity. So if you look here, the first cash settlement futures launched December 10th and 8th in 2017. Look where that was at the top of the Bitcoin, at the top of the crypto market. Okay.
Mhm.
Same thing here. They announced a partnership between Ripple, XRP, and American Express and Santander on November 15th, 2017. That was at the top of the market. And then XRP and all crypto crashed. See, even XRP. All right. Do you see it?
Mhm. I'm going to add this just so you know, guys. I'm
Look.
adding this as a extension on the end of our end of our thing, just because I think this chart's so important. And I'm sorry we didn't do it during the main thing, but if they watch till the end, then you're going to get this great chart. So go ahead,
Yeah.
keep going,
Yeah.
Glendale.
Look here. Do
It
you
is
see my
important.
cursor?
Yes, yes, absolutely.
Look, they launched the Purpose Bitcoin ETF in Canada on February 18th,
Mm-hmm.
2021.
Yeah.
And they also the Evolve Bitcoin ETF called the EBIT, February 2021. Look where that was. That was at the top.
Wow.
And then we crashed. And
Mm-hmm.
then right when we got to the higher top for the next run in 2021, which was October, look, they launched the Bitcoin ETF Pro Shares, launched on October 19th, 2021 at the top. You see why they launch it at the top? So everybody could get excited, buy in at the top, and then lose all their money because the institutions were exit. Same thing here. Even at the bottom here, this bottom here,
Mm-hmm.
they launched the first Pro Shares short Bitcoin ETF here. Why did they launch a short Bitcoin ETF? So that you can short the market while we're already at the bottom, which means the market will go up and you get liquidated.
Wow.
Okay. And then same thing here. Several major crypto ETF announcements at the top. This was called a cycle. This was called a local top. It wasn't the top of the cycle, but it was a local top. And then we crashed heavily into March when Trump announced the tariffs. But right before it, they launched these ETF announcements. Okay. Franklin Templeton. And then right here, the S&P launches new crypto index and 15 cryptos and 35 crypto related stocks on October 7th. And now we've crashed already and we had the $20 billion liquidation. And then yesterday or day before yesterday, XRP ETFs, right?
Right.
That was right here. I didn't even add it yet. I'm going to add it. That was right here. And then look how much we crashed already.
Well, I
Do you
mean,
see what they're doing?
yeah, but see, when you zoom out like
Mm.
this and you look at the financial system through this lens,
Right.
strategy instead of chance, you start to see that pattern that every market shock, every coordinated headline, all the urgency announcements from these institutions, it coincides with the
Narrative
same
play
underlying mechanism to transfer liquidity from the public into
to
the
the
hands of
rich.
the player who really control the system. And it works
Exactly.
because most people react emotionally.
Yeah. And if you look very close
Mm-hmm.
here,
Oh, okay, on the side, yep.
see, we had this low here, the cycle low,
Mm-hmm.
cycle low here, cycle low here, cycle low here, cycle low here. And guess what? Right now, this dip we're seeing cycle low. Do you see what's happening? This is basically a stair step all the way up. And everybody thinks, oh, this is the end of the cycle, you know? But no,
Mm.
it's not, because guess what? Check this out. This is really crazy here.
Oh
But
my
this is
God.
no, this will
No,
blow your mind.
I
I
agree
hope
with
that
you,
people are
man.
watching this. I'm going to have
But
David clip it in at the end because this is so good, you guys.
You
But-
see, you see
God.
you see the blue line?
Yes.
This is called the 50-week moving average. Every time Bitcoin closed a weekly candle below it, it was the end of the cycle, as we saw here. Excuse me, up here. But every time Bitcoin touched it without closing below it, we shot up. See, we touched it here, shot up. Touched it here, shot up. Touched it here, shot up. And guess what we're doing right now? We touched it again, and we still have 2 days before it closes. So if this shoots up a little bit and does not close, that means we're shooting all the way up to the top, and Bitcoin's going to 140,000.
well, here to your point, can I please add something?
No, I'm not joking.
I know, man. I'm on your
Not
side.
joking.
You know this. But the funny thing is also after the damage is done, these shorting positions, the narrative then changes if you've noticed. After they've short and played their hand, that's when the price is suppressed and the tone of the announcement flips. Suddenly they start announcing the crisis passes, right? And then there's this renewed optimism again. And that's when institutions are buying to sell again. And this is not a conspiracy, it's strategy. It's the blueprint that they've used across not just crypto markets, but metals, equities, and even currencies like Forex.
Well, you know,
So,
everybody's saying it's not the 4-year cycle's over. Look what I measured. Everybody's measuring it from low to high.
Yeah.
Low to high is 1,064 days exactly. This was 2015 into 2017.
Mm-hmm.
Same here. Low to high, exactly 1,064 days. Now here, 2022, low to high. 1,064 days was just about a few weeks ago. But guess what? I'm measuring it differently now. I'm measuring from low to low. And low to low, I put it down here in the charts,
Oh, okay. Mm-hmm.
is 1,435 days. From low to low. Low to low, 1,435 days. See? This is exact pattern to the day from low to low. The cycle is 1,435 days. Now guess from the low of 2022 to the next low, assuming we go by 1,435 days, guess where that takes us to? November? No, low to low. That's November 2026 will be the bottom low of the new bear market. So that's a 4-year cycle. But you know what that means? That means we're going to have to top very soon and then slowly decline. High. Yeah, and then slowly decline for like 10 months into the new low.
That's a new high, and then it closes. And the funny thing,
and then decline slowly for several months into the low.
Wow.
And that would be 1,435 days. So that's still a 4-year cycle. So basically, everybody's saying 4-year cycle's over. Wrong. We won't know until 2027.
Yeah.
In 2027, then you can draw a conclusion.
It's a good point, but the public won't realize this, Mindell, until they assume the market is responding to the news. But in reality, it's the news that was engineered to create the response.
Yeah. And XRP, I don't see it going anywhere past. I have 3 cases ranges, okay? And it's based on strictly liquidity and Fibonacci levels. XRP could go anywhere from $4 to $8, $8 to 16, 16 to 25, and 25 to 36 on the high end. That would be the most bullish case.
Okay.
And that's strictly based on Fibonacci levels. But at the same
Wow.
time, I'm not selling any XRP until I see Bitcoin dominance dropping. Because every time Bitcoin dominance drops, that's basically your altcoin season.
Okay.
And right now, Bitcoin dominance is still holding pretty strong as we speak right now. So if I put Bitcoin dominance, I know you don't care too much about this, but if you're serious about making money
No, I
here,
like it. Versan, if you need to go, because I know this is our after show, if you need to go, hun, go ahead. If you need to. But I want you to keep going, Vandell, if you're good to go.
yeah,
Whatever you guys need to do.
see every time Bitcoin dominance drops sharply, do you see that?
Yep.
That's literally your altcoin season. That's altcoin season. Every time Bitcoin dominance drops like that.
Do we
And
know
I
when that's
actually,
going to happen again this cycle? Do you have like a projection of when?
yeah, I do. I
Bitcoin-
said that's what I was saying. I see it happening no later than February. I
Oh,
don't
okay.
think this is going to go on. March would be the last straw. Like that's it. But I don't see this happening beyond February. So this is total two, which is all the crypto market cap, excluding Bitcoin.
Mm-hmm.
Now, what's crazy here is I actually did a what do you call it? Total three. Okay, here we go. Okay. Every single time Bitcoin dominance dropped sharply,
Mm-hmm.
this is when altcoins exploded. And basically, it's between 2 weeks to 28 days, actually, more specifically. So from when Bitcoin dominance actually drops, you got 2 weeks to 30 days at the most. And you're going to see Bitcoin dominance drop very sharply. So BTC, here it is. Look, Bitcoin dominance. Okay. Oh, shit. I'm sorry. Excuse me.
That's okay.
Yeah, this is very critical because basically this tells us that currently, all right, this is Bitcoin dominance.
Mm-hmm.
I actually made this chart like 3 months ago. Okay.
Mm-hmm.
And I actually plotted these circles myself, indicating that, hey, I think the prices of the Bitcoin dominance is going to fall in these areas. And
Mm-hmm.
it did exactly where I put it. It fell into it, and now it's falling into the red area now. And I think what's going to happen is it's going to shoot up slightly. So I'm going to drag this here a little bit, but I think that's going to happen. But once it goes up, it's repeating the same pattern we saw in 2020. Do you see it?
Yep.
1, 2, 3.
Yep.
And then it's going to drop. The sharp drop here is between 2 weeks and 28 days. And
And that's
that's
when
actually
altcoins go up during that time. As it's going down, altcoins are going up. And that's when you get
exactly.
out of
And
your position if you are going to
Yeah,
do
and
it.
that's when gold goes through the roof.
Yeah.
yep. And this is a direct in correlation. Do you see Bitcoin dominance dropping here? The red, where I
Oh,
put the
yeah.
red.
Mm-hmm.
This
Mm-hmm.
is the altcoin market. What happens? Shoots up.
Up. Yeah.
That's your bull run. Now, if I actually took, how many days is this? This will actually blow your mind, but basically it's very short-lived. And I know people are saying, oh, we're gonna be basically starting a new bull market and trending, for the rest of the year.
2026.
And
Yeah.
yeah, no, they're all wrong. They're all gonna lose all their money from here to here. Um, oh, that's the wrong one. From here to here, exactly. Where is it? Date. Okay, there we go. Right here from the top, from when it starts dropping to there. The real move starts right here. Okay, there you go. That's the real sharp drop right there. But basically, you got about 2 weeks to a little over 30 days. But when it happened here, it was actually even shorter in 20 where was it? Yeah, that was 2020, but in 2017 it was even shorter over here.
Mm-hmm.
So basically what I'm saying is you're gonna have like 2 weeks, probably less, till you actually see that steep drop form.
So we'll
And
see
Bitcoin
Bitcoin go
dominance.
down. So it'll go,
No, not
um,
Bitcoin.
oh,
Bitcoin price will rise, but Bitcoin
oh,
dominance will drop.
okay. I
And
see.
that's the key. Bitcoin dominance. It basically means a lot of the capital is rotating out of Bitcoin,
And
but the
into,
price is still high and it's
okay.
rotating into altcoins. And you're going to see altcoins simultaneously rise. As you see, right when Bitcoin dominance had a sharp red drop, that's your altcoin season. Do you
So how
see it
does the
here?
average person know when Bitcoin
That's
They
the thing.
don't.
dominance is
They don't.
dropping? Because we just look at the price and go, oh, it's 104,000, oh, that's great. We don't know that it's dropping at that point, except to look at the alts as they start to go up. Is that our key as an average person? Is Bitcoin's here and maybe it's going up, but the altcoins are surpassing
But
or
that's the
going up
thing. See,
higher?
Judy, it's just the macro technical analysis of those cycles is what matters. You're never going to know, but you're around the area where it's going to move.
Okay.
So you have to be prepared for any scenario.
Okay.
Yeah, check
Yeah.
this
Wow.
So
out.
you have to have a short-term strategy
Yeah.
always ready to go.
Okay.
Yeah, I was just telling you that I think it's going to be short-lived and I have a lot of data to support it, a lot of data. Um, and I think it's going to be fueled by maximum retail interest. And that would be done by luring retail in with all sorts of compelling narratives.
Okay.
It's going to be artificially manufactured and pushed out to the people to bring them in buying at all-time highs. And that's
Okay.
going to push prices even higher to irrational levels.
Because they're
And
FOMO, right?
yeah,
Fear of missing
FOMO
out.
and
They're going to
and
FOMO
smart
in.
money will
Yeah.
be exiting at that point. What you'll
Right.
see is Bitcoin dominance drop around that time. Um,
Okay.
I found something really crazy too, which I share in my private group, but I'll tell you now. Every cycle, when Bitcoin dominance hit 49%,
Hmm.
Bitcoin dominance, that's actually when the Bitcoin price actually peaked. And we're
Interesting.
right now, Bitcoin dominance is at 59%. So we're not at 49% yet. So this is not the top.
Okay.
Yeah. Even though it seems like it is, but it's not. We're going
Yeah.
higher. Yeah.
Okay. All right.
Anyway,
Well,
that
thank
was a good
you.
show.
Yeah, thank you, Vandell. I'm going to make sure this is in the after show.
Oh, yeah.
People will love it. It went long, but it was worth it. And if they have the patience to watch it, they're going to learn even more. So
They
thank you,
will.
Vandell, for your
Of
time. I
course, Judy.
appreciate it. Okay.
Yeah, good
All
seeing you. I'll
right.
share
It's
it
good
too
to see you.
once you have it ready. Let me know. Okay.
Thank you. Okay.
Okay.
Bye.
Bye.